Hello and welcome back, guys, to the channel. This is your boy Howie. It's officially back in business once again, and we are basically going to be continuing with the MMC footprint strategy breakdown. We'll just call this episode two, right? Or part two is the MMC footprint breakdown, part two. So before we get into it, guys, make sure you subscribe if you haven't, turn that bell button on for notifications whenever we post something new. In order for you to stay up to date with our content, and let's dive into it. From the last video, guys, I've been speaking about like basically three major things, which are structure, S&D, supply and demand, and confirmation, right? It's three simple things, right? Structure, S&D, and confirmation, right? SSC, right? If you want to crane this, write down somewhere. It's all you need to understand how the market moves and why do they move like that. So from the last video, I have been speaking about this bearishness, long-term bearishness that we have been having on this XXX USD pairs, right? Because of the dollar strength in the long term. So we have been very bearish on Euro USD, Pound USD, and very bullish on USD JPY. These are the three major pairs that I trade, guys. Let me just speak about this just for psychological refreshment to you guys. It's very important for you to have like your certain bunch of pairs that you're gonna stick to it. Because when you're trading a single pair for a very long period of time, right? Because I know the pound USD chart top down, right? From the monthly, I know what's everything that this chart is doing. I've been there and I know every single bit of thing that's going on here, right? Why? Because I've been trading it for a very long period of time and I have been sticking to it, right? So there's a difference between just, like going to a chart, maybe like a GBP CAD chart. So let me point this in a straight way, right? There's a very big difference between someone who just wakes up, perhaps maybe like in the London session, going to the trading view and just opening like a random chart, right? Maybe like Euro AUD. They've never even traded that pair and they just open it and see it, okay, like what's going on here, and they want to understand that chart and take a trade that's actually going to be profitable. Well, that's a little bit that's very hard said, done than said, than a person who sticks to maybe like two, three, or four pairs and trades only them pairs like for 5 or 6 months, right, straight, no shifting, no changing, right? That person, if he wakes up during the London session and goes to that pair, he knows exactly what he's looking for. Because I know that, okay, pound USD is bearish on the long term. So when I come to my chart, I know exactly what I'm looking for, right? And that's what you see here, right? This is the application of the long-term chart persistence, right? All these areas here, I've been managing to catch sells, to catch buys, like all over the price, right? You can see my chart is dirty as fuck, right? But that doesn't matter. A lot of people tend to say like, you have a clean chart, but I mean, having a clean chart, when you know what you're doing, it doesn't matter, right? I mean, if you're someone who's learning, it's better to keep your chart very simple, so there's not many data points in that chart to add confusion to you. But once you're a certain type of trader who knows exactly what he or she is doing, it's, I mean, all these things, right? You can have a ton of things, right? Because everything you use, you know exactly why you've used it, and what's it for, right? So I know like everything in here, right? If I keep my liquidity targets open like this, I know like, okay, this liquidity target is taken, right? This liquidity is taken. It's inconsiderable. So I don't look at it anymore, right? I don't consider it, right? So there's a difference between knowing and understanding, seeing and looking and seeing, right? Listening and hearing. There's a difference between those things, right? For example, let me talk about the retail side of the market, right? Because we've all been there, right? There was a time even I was trading trend lines, I was trading fib, like, and the retail side of the market, I'm not speaking bad of it because it is what it is. I've seen traders big traders making thousands of dollars just trading retail and they're happy with it. So not everything works for everybody, right? If something works for you, it's not going to work for everybody in the world. That's a key point that you should understand. So the major part of this market, of this industry, is finding the thing that actually works for you and sticking to that thing regardless of what's it gonna take, because like inventing a trading system that will work for you in the long term does require some huge sacrifices in the short term. Why? Because when you're creating a trading system for yourself, right, you're gonna have a lot of losses, a lot of break evens, and a few profits at the beginning. When you adapt to it, you're gonna have less losses, many break evens, and less profits. That's you get into that's the intermediary step, right? And then when now you have mastered it, you're gonna have few losses, small losses, some break evens every now and then, and big wins, right? That's the overall process of nurturing a trading system that will actually work for you in the long term, right? That's why many people quit in the early stages. Why? Because you're a human being, right? We humans get tired. That's our nature, right? So when you're working for yourself, you're doing a lot of labor and you're not getting paid for it. So that's easy for you to say, you know what? Nah, man, this is not for me. But if you could have stuck to that over the long term, I mean, whatever you were working for, I'm sure it would have made you a shit ton of money in the end. So that was just some psychological freshen up. So let's go back to the idea of knowing and understanding, right? That's the major thing that I want to speak about today. And, we'll look at a few examples from the actual charts. So considering retail traders, right? People who trade trend lines and fibs, most especially, right? So you would have somebody, like people, trend line traders, having something like this, right? Having a trend like this, and it's marked with a trend line, right? So this is how it's done, right? Boom. And like there are, okay, so we have our trend line drawn, right? We have our trend line drawn, and our entry points are at the test of the trend line, right? Let's say here, 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 right? These are entry points. Now, yes, they are profitable. Why? Because they're taking an entry here and the market is actually selling, right? It's going to the right side of their anticipation, right? But this is just the idea of knowing. They know that if price moves, it's going to retrace back to the trend line. I'm going to check my entry and it's going to flow downwards, right? They know that. But what I'm teaching you guys, what the MMC footprint strategy is there for, is to let you guys understand why is this done and what is it for. So let's now converge back to our rules, right? Structure, supply and demand, and confirmation. SSC, as simple as this. So from this, let's say this is our chart, right? So from this chart, let's look at our structural narrative, right? We have a breaker structure here. So the market is bearish. So now we know that, okay, structure is done, it's bearish. Supply and demand. So in a bearish trend, what are we looking at, right? We're looking at unmitigated portions of price supported with supply zones above them, right? So with that being said, we're going to look for whatever zone is in there that does require mitigation. Lo and behold, that's your zone. The next thing after your zone is waiting for that retest, which does happen, coming to your zone, right? Where we look at lower time frame confirmation. Same thing applies over and over again, right? Breaker structure, right? Breaker structure, supply zone. Market comes, tests it, lo and behold, that's our entry, we go down. Breaker structure again, supply and demand zone, right? Price comes back, tests it, that's our entry, we go down. So this is what the MMC footprint strategy is there for, to create that level of understanding into the minds of you guys, right? Because we're looking to take this industry to the next level. So this was me speaking about trend lines and how they work, right? So let's now go to the other thing, which is fib, right? Boom. So given a trend like this, right, you have a bearish trend, and you have what, uh, those break of structure, right? Because like the fibs, they just look at a high and a low, right? So you have a low and a what, and a high. So they would put like their 0 here and their 100 there, or I don't know how it's, I don't remember how it actually works, but they'll have like their 0.7 level somewhere here, and they'll just go on, draw some a thing like this and say like, okay, we're waiting for the pullback here. That's our entry. Our stop loss is below the low, and our take profit is the high. Our first take profit is the high. Now, what sense does this make? It makes absolutely no sense. Why? Because they are correct. I'm not saying that they're wrong. They are correct. Because I myself, I have used fibs. I mean, it was profitable for me at that time, but it is what it is, right? So this is knowing. They know that if the market extends, it's going to retrace to the 0.7 level, where that's our entry, our stop loss below the low, and our take profit at the high. They know that, but they don't understand why that happens. So let's go back to our three rules: supply, structure, S&D, and confirmation. Lo and behold, you have your structural narrative pushing bullish. Why? Because of the break of structure right here. If structure is pushing bullish, then in the case of supply and demand zone, we are going to be looking for demand zones that are actually supported with imbalances above them. Lo and behold, that's your demand zone there. And after you have your demand zone, what are you waiting for, right? You're going to wait for price to make its move, retrace to that zone, right? For what? For mitigation. And once that mitigation is complete, where now that price would have tapped the 0.7 level for the fib traders, right? But to us, it would have tapped our demand zone. Now, once our demand zone is tapped, we now seek for lower time frame confirmation. Lo and behold, this right here is that intermediary trend that you have in the lower time frames, right? So with this being your intermediary trend, you want to see price shifting, right, from bearish to bullish within that intermediary trend, right? Testing those demand zones, which are now your entry, your first entry there, your stop loss below the low, and price breaks again, your demand zone is there, just tests it, and then breaks again, because tests it, and then now price leaves towards where this high as its next liquidity run area. Now, why did I say these 3 times? Because more often than not, when price is actually shifting, it's going to make the first break, which will be the change of character, the second break, which will be the break of structure, and the third break. Now, after these 3 breaks, within which each break gives us an entry, that's why I did say that this would have been your entry 1, entry 2, and entry 3 if you're looking to enter in both areas. But if you are someone who's more patient and waiting for a more potent confirmation, you could have, you should wait for the first break, which is the change of character, and the second break, which is the break of structure, and then after that second break, the retest, that's your entry, your high probability entry towards the upside. Now, price more often than not will tend to break 3 times and then give you that massive run without any major pullbacks. This is why we say that if you have missed the first entry, then wait for the second, and finally the third. If you miss all of them, then it is what it is. It's part of the game, because it's normal for price to just and price sometimes can just like, if it was going down, right, it will break, give you that little bit of test, leave, right, break again, little bit test, leave, right, and then just keep on running and running and running if the momentum in that market is very high. So that's all part of the game, right? It's what we do, it's what we signed up for, so it is what it is. So after speaking about this, there comes my concept of understanding, knowing and understanding, right? We MMC footprint traders understand every single bit of thing that the market is doing before, I mean, when it's doing it, rather than the high percentage of traders, mostly retail, who just know that, okay, price is going to do this, but they don't know why that thing is being done. So at this point, guys, I hope what I said made some sense in your minds. Learning is a gradual process, right? I'm not expecting you guys to swallow up everything in a single video, right? That's why I try my best as possible to break these down for you and, keep on going them slowly but surely. So let's look at, like maybe one or two examples, and then we'll continue, right? So okay, my internet just shake there. Let me pause this. Okay, boom. So we are back online. My internet just went off for a second. All right, so let's look at the breakdown at the trades that I did on Friday. This is pound USD, of course, and let me just clear this shite for you. Okay, boom. So there we are, right? So I had a lot of areas anticipating for entries with this break here, right? The same three things, right? Break of structure, the structural play is what? Bearish, right? If it's bearish, then we're waiting for what? A test at the supply zone, which tested perfectly. My entry there, stop loss there, and price just ran downwards, right? So I have cleared some of my trades in there, but the the most important part that I want to speak of was here, right? So this is the idea of sometimes follow price doesn't follow just a single trend, right? Price tends to liquidate trends over time. So price, like can do this and just go up and down, but overall the market will be in its specific trend. Lo and behold, this is exactly what happened here. So we had this break here. I was anticipating a retest at this area, which was tested. I didn't catch this entry though. I did have another break here. Sadly, the retest was too short, didn't reach my supply, but it broke again and price came up, reached my supply, absorbed it a little bit, with this wick coming up all the way up here to mitigate this. But I took a loss here. I took a loss there. Yeah, I did. I took a loss there. Pretty good one. So it is what it is, right? It's part of the game. But after that loss, then I came and see, like this huge wick here, showing that everything that just happened here is just absorption, no real breaks, no real changes. So I continued following my bearish bias, which saw me catching this trade here, right? With this break, creation of this low and this high. So retests at the supply zone here. That was my entry there, entry one. Break again, right? Forming this low from what? This high. S&D here, right? This zone here, which was perfectly tested with this wick. Entry two. Break again, right? This low being formed from what? This high. Last up move before the down move, aka supply point. Entry three. And lo and behold, this break right here, right, with this retest here at the supply zone, which was entry four, that I was taking partials along the way. I closed most of these trades here and I held this one here. Why? Because it was such a good trade, right? So boom, the entry there, the stop loss there. I did reconfirm this in the 30 seconds chart. I'm just giving you guys a heads up on what I'm doing. So, like I don't really have to do all of that once again, but this was the overall trade. Boom. So with this entry here, I was looking to target the overall next liquidity run all the way down here, at 300 pips, right? So, like it's a trade still running, but I have closed it. We'll look for re-entries on Monday when the market opens once again, right? So the SSC, guys, the same three things that I have been talking about in this video, in the last video, the same rules apply every day and in every single market, guys. It's all on repeat. As long as you follow it, you stick to it, and you subdue to it. So this is basically it in this video. It's going too long and I want to cut it short. And also, guys, if you do want to join our premium community, you could DM us on Instagram at official Green Pips FX, as the poster shows, and we'll be more than happy to receive you guys. Apart from that, subscribe if you haven't, turn that bell button on for notifications, and until the next time, guys.